Hey everybody, it's great to see you. Welcome to another episode of Why Real Estate. I'm your host, my name is Lane Thompson. I have the privilege of sitting here next to Chris Anderson, the owner of Solence Wealth and Tax Advisors.
I'm glad to be here to talk about taxes.
Yes.
Hopefully we will not disappoint. Usually taxes can be very dry, but we have some really exciting ways to teach you and help you learn how real estate can help you not pay as many taxes. And most people find that exciting.
Yeah, and all you have to do is really one time feel the sting of the federal or state government dipping their hand into your back pocket,
Yes.
into your bank account, and they have no shame whatsoever in doing so, to realize you've got to have and figure out as many legal tax strategies as possible.
Yes.
To lessen that burden, because it will become in time, it does become, even for me, my largest financial burden. I don't view my own house as that big of a burden, even though I own on it. So,
Right.
But taxes, as you know, Chris, it's huge.
Yes, it's so huge. And yeah, most new clients come to me because they've felt that sting for the first time, and they're looking for somebody that can help lessen that sting. And one of the greatest things about the tax law, people don't realize, is Congress writes tax law. Well, Congress is full of a bunch of rich people who don't like to pay taxes. So they write law so that they don't have to pay taxes. We'll get into some of those laws today that they've written that we can benefit from also. And so the tax law is, there's a slice of, okay, you can't do this, but most of the tax law is what can you do? And we just need to know what that is and how to apply it. And certainly tons of tax law written around real estate to help us not pay taxes as we invest in real estate.
So you brought up a point that I've read before, and a healthy way to look at it is to not look at, hey, where am I restricted, but what is the tax code telling me I should do to take advantage of it?
Yes.
And it literally tells you what to do.
Yes.
And there's a ton involving real estate because, since 1995, our population has grown in the United States by 70 million people. Here in Utah, it's probably doubled in that time.
Yeah.
It's just massive growth. And so you have to take the approach and you have to play the game. Otherwise, you hear that you can't get away from death and taxes are the only sure thing. That's absolutely right. And if you want to lessen that tax burden, we got to find those. They're not loopholes, but they're literally strategic things you can do to lessen that burden, so you can grow your wealth, have greater savings, peace of mind, retirement, immediately and in the future. So in regards to real estate, there's several strategies that you can employ, and I'm not going to remember all of them because I'm not the accountant, but one to highlight that, obviously I'm a real estate professional, and there's a specific designation with the IRS that is real estate professional that basically says if more than 50% of your income, and if you spend more than about 700 hours a year roughly in that dealing with real estate, and it doesn't have to be just real estate, like selling as an agent.
Yep.
What are some other businesses or people you've helped in taxes? What do they do for a living?
Yeah.
Helps them accelerate depreciation right off.
Yeah. So one of the great things about real estate is we get to depreciate property, right? That's what you're leading to. And so when you buy a house, a rental property, you don't take that, say you buy it for $500,000, you don't take a $500,000 deduction the year you buy the property, right? The IRS makes you spread that $500,000 out over 27 and a half years. Well, that's a really little slice of that $500,000 every year. And so there's however, that depreciation is, even if you only take that little slice, it's still a good thing, because as you're receiving income from that property, that depreciation is going to, on paper, remove that income.
Right.
So now you're basically getting cash-free income from this rental property, as well as now you're having somebody else pay your mortgage off, right? Which is super cool. And so, but one thing that Lane was alluding to is there's a tax law that's called cost segregation. It allows us to take that $500,000 property and we're going to break it up into components. We're going to say, here's the electrical, here's the plumbing, here's the flooring, here's the doors, here's the windows. And then all of those things can be depreciated over much faster. So over 5 years or 7 years. And so it creates this huge depreciation deduction the first 5 years you buy the property, and then it kind of slowly tapers down. Now there are some restrictions on being able to deduct expenses from real estate. And so if you're a real estate professional, though, as Lane was talking about, there are no restrictions. And so to be designated as a real estate professional, the two biggest things are the hours, and it's 750 hours, so you're right there. And then being able to spend more than half of your time on real estate. So realtors qualify, construction, any type of construction qualifies.
That's a wide range.
It's a wide range.
Yeah.
And so then you'll have
Mortgage lenders.
Yes, mortgage lenders.
Okay.
And you'll get into an area where the tax law isn't quite as definitive for some people. Like I have some engineers that may or may not qualify. Engineers that are actually designing and building out plans for houses qualify. I had one that's a landscape architect. They're a little bit, there's an argument for it, but there's an argument against it. And so there are some areas, depending on your profession and how you deal with the real estate, there's an argument for people that are, door-to-door alarm systems or solar systems. There's an argument for them because they're dealing with houses all day long. That one, again, is a little bit like the landscape architect where it could kind of go either way, and you need to really have a good accountant you can feather that out with and have a conversation and evaluate the risks. But the ones that are definitive, real estate agent, those construction workers. And then we can get into, so maybe you have,
Property managers.
Property manager.
Including people who do their own. They
Exactly.
don't have to be a property manager with a real estate license, but they own the property and are managing it themselves.
Yes, you're reading my mind.
Yeah.
Yep. So we have some. So maybe the one spouse, the husband, has a job that has nothing to do with real estate, but makes good money. There's no reason for him to stop working and go to real estate. Well, you can still have real estate, but have the other spouse do all the work and do the property management. She has no other income. She's getting the 750 hours. And now when you create these losses from like something like cost segregation, you can still take all those losses against the working spouse's job or business. So
here, we're going to give you a real example up on the screen. We're going to pull up a tax return, okay, of a business. And where would you find, where is the depreciation accounted for on an accelerated basis? I guess it would be the same spot as regular depreciation, but where do you find that on the tax form?
Yep, so every tax return will have a depreciation schedule, which we'll show you, and it breaks down all the different components that I just talked about. And you'll be able to see where these 5 years and 7 years and 15 years got accelerated on this tax return. And that detail then goes up onto a Schedule E where you'll have all the expenses and income for each property kind of broken down, but you'll show an end number of a very large depreciation expense. This tax return that you're going to see, the savings from the cost segregation was about $100,000 in taxes that this client would have had to give to the government. Instead, got to keep that $100,000.
And I think they were at the highest end of the tax bracket, which at that time in 2022, which is this one is from, would have been probably 38 or 36%.
38%.
38%.
And then stay on top of that. If this client lived in a state that has state taxes, which is another 7%.
And so what that person did in setting themselves up this way is they saved $100,000 by purchasing those properties. And you can't do it all at once, like Chris said at the beginning. It's over a 5-year period max, right, that you can depreciate.
Yep.
And so that goes into future years once you buy a property. And they then, obviously all the other benefits of owning real estate come in: cash flow, leverage, appreciation, the tax benefit. Now, once it is caught into the accelerated or depreciation sense, if you want to avoid a capital gains tax, at the end of it, which you will have, or you'll recapture that depreciation, you've got to engage into a 1031 exchange in order to not pay that, right?
Yes, absolutely. So that's one thing that many, especially new real estate investors, don't realize, that depreciation, whether it's just the one little slice of 27 and a half years, or if you do a cost segregation, when you sell, any depreciation that's been taken has to be recaptured and you pay taxes on it. Now, worst case scenario, if you do that, you're still in a good spot, because when you took the deduction, you took an ordinary deduction, which was at that high percentage rate, that 38% rate, right? When you sell it, it's long-term capital gains. And so that's half the tax deduction. So even if you do nothing else, That's a benefit of real estate. You're able to turn ordinary expenses into a long-term gain. And so you're still saving a spread of about 20%. However, a 1031 exchange that Lane was talking about is you take that property, like, hey, I'm going to sell this property, I'm going to buy another property. And so all the profit from the property you're selling can be rolled into the new property and effectively pushing that capital gain down the road. And so you can avoid paying those capital gains altogether by doing a 1031 exchange. Now, if someday you do sell that property that you've 1031 exchanged into the new property and you don't do another 1031, then you'll have to pay capital gains at that time.
But by then it's depreciated so much that you're not having to recapture depreciation.
You do still recapture depreciation, yep.
Okay.
And so, but what a lot of clients do, so there's a cool tax law when you die that whoever inherits your real estate, they inherit it at what the market value is.
Okay.
And so if your kid gets the property, they want to sell it right away, they sell it for market value, but their basis, or effectively what they on paper bought it for, is market value, so they pay no taxes.
Oh, that's awesome.
And so a lot of clients, especially if you're, a heavy real estate investor, you're going to want those properties your whole life because it's going to feed you and grow your net worth and give you, tax-free income. And then you pass it on to your kids, and now they've got this awesome asset that they don't have to pay taxes on either.
Love it, love it. So a couple benefits he's thrown out would be depreciation, accelerated depreciation, 1031 exchange, and then obviously, at death of the principal who bought the property, or through their LLC or whatever, the basis for those who inherit the property is the market value.
Yep.
That's awesome because there's not a tax at that point.
Yep.
As far as other benefits tax-wise of real estate, is there anything else that comes to mind?
Yeah, I think the tax-free income, I know I kind of quickly brushed over that, but if you're cash flowing a property, say you're getting $800 a month, that really is, once you add depreciation in, whether it's accelerated or not accelerated, you get $800 cash every month tax-free. And so, and if you're a real estate investor where you're like, okay, I'm going to stack these properties, you get up to 10, 15 properties. I mean, that's a tax-free income you could live off of if you wanted to. And there's not any other business model that I can think of that will give you that kind of tax-free cash every month.
That is fantastic. So when you have it set up through an LLC, for example, a property, and you're cash flowing on that, it flows into your personal tax, right? But that doesn't add to your adjusted gross income to increase your liability on tax?
Right, because the cash comes in, but the depreciation is on paper, right? You don't have a bank account where you're writing a check out for depreciation.
Correct.
So on paper, this depreciation, so you have, I've got this $800 a month of income, and that's your cash flow, right? So you're usually charging more than $800 for your property, right? So say you're charging, $1,500, you pay your mortgage, you got your property taxes, you've got some insurance. So now at the end of it, you've got $800 that you can take home because you've paid all your expenses. That now the depreciation is on paper and wipes out that $800.
I see. So
by the time it gets to your personal return, the taxable amount of income is zero or close to it.
There's a saying that I love that is attributed to Thomas Jefferson from the foundation of our country, and it's a motivating and intrinsic driver for me on why I do real estate. And originally, they bought into John Locke was I don't know if it's John Locke, that's the guy from Lost, but
I think he was a philosopher, wasn't he?
Yeah, but he was somebody that he bought into, and he coined the phrase life, liberty, and the pursuit of property. It was such a novel thing because up to that point in history, back in the 17th century, there hadn't been, the private person could not own property.
Yeah.
It was all owned by the state or the king or the emperor, right?
Yeah.
And so he realized that if we could have individual property rights, well, Thomas Jefferson, that's part of what we hear as part of the foundation of our country is that phrase, and it was changed to life, liberty, and the pursuit of happiness, largely because they didn't want property to be stuck on as it relates to slavery.
Interesting.
So they pulled back the word property and put in the word happiness, but just know the real phrase is life, liberty, and the pursuit of property. And that is what has led to the greatest economic experiment in the history of mankind, which is the American dream, which is what some of us were born into, which have thousands dying to come here to participate in and be a part of. And owning property, specifically real estate, is just something that the masses get to do here that just didn't exist beforehand. So I find a lot of satisfaction in my work, because of that and what it has done in creating the wealthiest nation on earth, which then obviously bleeds into every other country on earth and what we can do for them, and charitably and supporting their economies and the individuals.
Absolutely. No, that's a great point. I think across my clients, and the two biggest things that increase their net worth is real estate and if they own a business. And the business, it goes up and down. It fluctuates quite a bit, and hopefully anyone who's a business owner, their goal is to slowly march it up. But real estate, you'll have dips like in 2008, but over time, if you look at any historical data about any property anywhere in the United States, and it's going to go up.
That's amazing. And
so, as far as increasing your net worth, your cash flow, your income, nothing can consistently do it as good as real estate.
It's simple economics. There's a limited supply of land.
Yep.
Right? Well, and that being said, there's still millions upon millions of acres of land all over the world that is uninhabited that we could grow into and develop and support, the human beings on. So, Chris, I thank you for joining me today. This has been awesome, very educational. I want to put in a blurb for Chris. He is an enrolled agent. He has the capacity to do taxes in all 50 states. He has a highly sophisticated and complex business that can handle the most simple situations, tax-wise, to the most complex that involve multiple trusts, irrevocable trusts. The entire spectrum. A lot of high net worth clients throughout the country work with Chris and locally. And he and his team knows he's got a large staff. I used to be the kind of guy that wanted the personal touch with the one accountant, and then I realized that he was limited, that accountant, in their capacity alone to handle a sophisticated type setup. Not saying that I'm Mr. Sophisticated whatsoever, but I soon learned that Chris and his team are definitely the right fit for me, and I thoroughly enjoy working with them. Couldn't recommend you highly enough. Chris is one of the founders of that nonprofit. It's called Is Hope. I've talked about it before on a podcast or a show like this. Phenomenal organization. If you're thinking or considering looking at a nonprofit that carries its mettle and worth its weight, it is Is Hope. I'm a board member there. I currently serve as chairman of the board. I just assumed they had no one else, so I had to do it. But it's such a blessing, to be a part of, and the difference we make in the lives of especially women that have been sex trafficked. Yeah. We don't do the extraction. We do the full end-to-end rehabilitation, including acclimation back into society, providing an animal therapy farm, place to stay if they need it, full therapy services. It is a lot of money to run an organization like that, and we don't just have monetary donations are very much needed, but there's also opportunities to get involved manually. If you own a business, you want your employees to develop a little more sense of gratitude. We have a farm where they can help us. It's always needing work, mowing, cutting, cleaning. We have goats, and we've had alpacas before. I always find those interesting animals.
Hugging cows.
Pigs. Hugging cows. That is a legitimate thing. I actually had to Google it when they told me we had one. But the cow is a snuggler. And Chris is so instrumental in what Is Hope has become, behind the scenes financial hawk that just helps, and a ton of his own money is put into this. He and his wife, huge, she helps run the farm, and she's such a sweetheart. Just really fortunate to make acquaintances like this with Chris, and thanks for being on.
Yeah, I'm so glad to be here. Thanks for the details of Is Hope. That's certainly a huge passion and big part of my life. And if you could sense or get a feel for what the survivors get at Dahlia's Hope, the word hope is an important part of our name, and they always find that hope when they come and work with us at Dahlia's Hope. So it's so great.
And please remember support Dahlia's Hope, please. It is, look into it. We've got a 5-star rating on GuideStar. That is very rarely given. I don't know if even 1% of nonprofits achieve that, but it's essentially, we are so transparent on our financials, right? And where every penny goes, that well over 90% of what comes in from donations go to the direct care, aftercare of survivors.
Yep, it's great. I'd love to see that to go to 100%, but they don't let me count office paper. But our donors are so generous. Our staff is so generous with their time. People like Lane, 100%. All of his time is just volunteer, and we have an amazing board. And so it makes it, when you have such amazing people around dedicated to such a great cause, it's easy to get some of those things like the 5-star. And we got it in 3 months, which is just almost unheard of. Yeah. And so we were pretty proud of that.
I mean, we're barely, we'll be 5.5 years.
Yeah.
I think so. We were recently named a year and a half ago as July 19th, the day we were founded. 5.5 years ago is now Dahlia's Hope Day in the city of Pleasant Grove.
That's right.
That we are, originated from.
That's right.
The city we both live in. And so, anyways, Chris, I thoroughly appreciate you, and thanks for doing this. And there is so many nuggets of wisdom with what you shared, and we'll make sure that we include, obviously, on paper how they can see it affects their taxes directly in that example we gave. Anything else you want to add before we cut out?
I just appreciate being here, appreciate sharing good ideas, whether you're my client or not. I think you're going to spend money better than the government does.
Yes.
And so the more we can keep our own money, the better our country is going to do. I firmly believe that. And if you need a good realtor and you haven't looked up Lane yet, you better do it, because he knows what he's doing when he's dealing with real estate and getting you the best deal.
Thanks. And I just had a thought with this new Department of Government Efficiency that they're putting in with Trump's election. Have your own Doge. Connect with Chris. Okay, so you can save as much money as possible.
Yeah.
Thanks for tuning in, guys.